Yo, BrainRoss, welcome back to another video. Right now, you would know if you're not living under a rock that there is a war unfolding between the United States and Iran. And most people think it has nothing to do with them. But that is not true. Because even if you don't follow politics, this situation is already affecting global markets. It's influencing stock prices, moving crypto, and shaping the economy. And the interesting part is the war itself isn't directly crashing or pumping markets. It's creating ripple effects, and those ripple effects are what actually move money. So, in this video, I'm going to break down exactly how this war is affecting stocks and crypto in the simplest way possible. First, whenever a major conflict happens, the first thing that hits the market is uncertainty. Investors don't know what's going to happen next. They don't know if the war will escalate or if global trade will be affected. So they reduce risk. We've already seen this. S&P 500 dropped 1.5 to 2% and Nasdaq Composite fell even more. Stocks like Tesla, Nvidia and Apple also pulled back. Not because they became weak, not because they were weak, but because investors they chose safety over growth. Now here's the important thing, the important part of this entire situation. The biggest way this war is affecting markets is through oil. Iran is located in one of the most important energy regions in the world, right next to its key global oil route, where a gigantic portion of world's oil supply passes through, approximately 20%, the Strait of Hormuz. So when conflict starts there, markets they don't just see war, they see risk to energy supply. And here's the key thing. Oil prices don't only rise when supply is actually disrupted. They die when there is even a chance of disruption. That fear alone is enough. And we've already seen this happen. Brent crude oil moved above $100 per barrel, and WTI crude oil surged as well. Now, why does that matter so much? Because oil is connected to almost everything in the economy. Every product, it needs transportation. Every factory it needs energy. Every supply chain depends on fuel. So when oil prices rise, costs increase everywhere of everything. Shipping becomes more expensive. Businesses spend more to produce goods. Airlines, transport companies, manufacturers all face higher expenses. And these costs don't stay with the companies, they get passed on to the people, the average people. This means higher prices for food, higher prices for transport, and higher prices for everything else in the daily life. This is how war in just one region slowly affects the entire world. And this is what makes oil the most important link between war and markets. Now, once oil prices rise, inflation follows. When inflation goes up, central banks keep interest rates higher for longer. And high interest rates are bad for stocks. Borrowing becomes expensive, spending slows down, and growth weakens. So stock struggles not because of war directly, but because of economic pressure it creates. Now crypto is where things gets they all that gets interesting. At first, the first days of this war, crypto dropped. Bitcoin fell during the initial panic. Ethereum followed, and the smaller coins they dropped even more. This is because crypto is treated as a risky asset in short term. But then something changes. After the panic, crypto starts stabilizing. At the same time, gold rises as investors look for safety rather than uh, risk. And some investors begin to see Bitcoin as an alternative system, not just as a risky investment. So so crypto has two sides. Short term, where it behaves like a risk asset, and medium term. It can act like a hedge. Smart investors aren't just watching the war, they're watching oil prices, they're watching inflation, they're watching the interest rates, because those are the real drivers of markets. They understand that the war is just the trigger. The real impact comes from how it changes the economy. Now, if you zoom out of all of this, just zoom out, everything will connect. Stocks dropped, tech companies pulled back, Bitcoin fell first, oil surged, and gold rose. Money moved from risk and toward safety. That's the pattern. So, next time you see war affecting markets, don't just look at the headlines, look at the chain reaction behind it. Because markets don't move based on events alone, they move based on what those events mean for money.